Gulf, there's no stopping that today. We've seen that the company reported its numbers, and we've seen the stock run away into it today, 12% uptick. Now, to talk about the outlook of the company, what are the volumes that one could be seeing in FY25, we're joined by Manish Gangwal, CFO at Gulf Oil, joining in with us this afternoon. Thank you so much, Mr. Gangwal, for joining in with us this afternoon on ET Now. You know, the street always wants to know this one number, and that is the sales volume number in million liters. What was that number for Q4 FY24, if you could start by that?
So, thank you for having me. First of all, our quarterly volume numbers were around 37,000 KL, and the full year volume for core lubricants is 1,42,000 KL almost. So we had a good growth, 2x the industry in terms of volume growth overall. And of course, our one of the segment which is called factory fill business, that was slightly degrowing because the vehicle production, especially in commercial vehicle, was down. So that sort of impacted partially, but overall we still managed to deliver close to 2x the industry growth rate. And in addition to that, we do a product called AdBlue. That also delivered a very good growth, and overall 37,000 KL volume there also in AdBlue, and on full year basis 1,30,000 KL of AdBlue volumes. So the total volume is roughly 2,72,000 KL.
Okay, so 2,72,000 the total volume for the time gone by. But what about the coming year in FY25? What kind of volume growth do you envisage? What could be the absolute number?
So usually we aim to have 2x or 3x the industry growth rate. We know that the lubricant industry is growing at 2 to 3% on a full year basis because the new better products are coming, higher drainage interval lubricants are coming in the market. And in fact, we are one of the pioneers in terms of these long drain products in India. But having said that, 2 to 3% industry growth, and we usually aim 2 to 3x. So obviously, we are looking at continuing our double-digit revenue growth targets, close to double-digit.
Right. Mr. Gangwal, you were mentioning about the AdBlue volumes, right? And I believe they've grown by around 20% when you compare on a sequential basis. Now, despite that, you've been able to keep that margin steady. So what are the factors that actually played out in terms of your margins in Q4 and what aided it?
Yeah, so absolutely. I think we have been focusing a lot on premiumization. So the product categories with better margins are definitely our focus. We have launched the new products both in the economy segment, value segment, as well as in the premium segment. So continuous new product launches and stable margins. I think the rupee was stable. The input cost was slightly higher during the quarter after the crude touched $90 and above. But now it's back to $83, $84. So that should help. We keep taking price increases whenever required to pass on the input cost increases. So margin management remains a key focus always.
Margin management remains a key focus, but does that mean it will stay between that 12 to 14% mark? Because that's been your range for the last 3 quarters.
Yeah, so our first target is to maintain this band and keep growing the volume. And obviously, at a suitable time, we'll also try to then move to the next band of 14 to 16%, which over the coming few quarters or a year or so.
14 to 16%. Do you think it could be the exit rate for you by FY25 end?
That's what the band of 14 to 16% is what is the next target. Obviously, a lot depends on the input cost, and the crude is a volatile commodity. So we have to wait and watch. But obviously, the aim is always to keep getting to the higher band with the focus continuing to remain at 2x volume growth in terms of industry.
Surely keeping an eye out on that. So yes, so hoping for that 14 to 16% exit at least over there, but exit margin that one could expect. Any price hikes that you've planned for FY25, or could one envisage anything on the price hike front?
Yeah, so we have just announced a price increase in our retail segment because, as we know, the input costs have been slightly going up, and the gross margins for the Q3 we have seen a slight dip sequentially of 1.5%. So to mitigate all this and to have a better margin management, we have just announced a price increase in the retail segment. In the B2B segment, of course, we continue to negotiate and keep increasing the prices. At the same time, OEM, which is a good part of our business, that's a price variation clauses are there, so that will be taken care of. So yes, overall, we are looking at a price increase. We have already taken a price increase in the current quarter.
Okay, so price increase has been taken and looking for more. But just before I let you go, what's been the demand momentum from the rural side? Because we have been hearing a lot more in terms of improvement of demand there. Is this something that you can corroborate for us?
Yeah, so absolutely. The rural demand is, we are seeing a clear uptick there. Our motorcycle range, our agri range is doing well. And, the rural is more about motorcycle and a lot of agri products. So that we are seeing a clear traction. That's one of the key reason why we are seeing a demand uptick. Also, our commercial vehicle segment has done well. So overall, yes, the demand conditions are favorable. And obviously, once the elections are over, I think the demand will further pick up because the infra activities and all will further pick up. So we are seeing both good demand in B2B infra segment as well as in the rural side, and our rural distribution is definitely growing in terms of volume.
Okay. Thank you so much, Mr. Gangwal, for joining in with us this afternoon on ET Now, talking to us about the volumes, the outlook of the company going forward, as well as in terms of the margins. That was the management of Gulf Oil joining in with us on the show.
If you like this video, then like, share and subscribe to ET Now.